Do you have a trading plan? Or do you feel like maybe it's a waste of time or something? Well, today we're going to talk about why your trading plan is perhaps the most important preparation for your trading. Stay right there. Hi, this is Tim from TradingStrategyGuides.com. Welcome to our channel. Trading plans. I just want to get on my platform and take trades. That's the fun stuff. Well, excuse me. Is this just a hobby? Something you do for funsies? Or do you want to make money at this and, tell your boss where to shove his job? Well, if it's just a hobby, then just go ahead and skip this video. You may as well skip all these videos because I want to help people become professional traders, not just hobbyists. In fact, just head over to Las Vegas. I think you'll find it a lot more fun anyway. Okay, I know that was way harsh. I just wanted to make a point. Trading is a business. How many business people will start a new business without a business plan? Well, no smart business people would do that for sure. And if you want investors, well, the first thing they'll want to see is your business plan. That, my friends, is what the trading plan is. It's a business plan. It's a map as to how you're going to run your trading business. So let's get on with it and discuss the trading plan. Building a trading plan is one of the most crucial things you could do. Unfortunately, too many people, especially new traders, are lazy. They just want to get on an online trading platform and start making trades without any kind of preparation. There are a lot of components that go into a trade, and there are a lot of trades that go into a day or a week or a month. There are different circumstances in which these trades happen, and without an actual plan that covers all possible trade scenarios that you might come across, you're going to have a struggle. If you think you can trade without a trading plan, just think about how often you've gone to the grocery store without a grocery list. And how many times have you gotten home and said, oops, I forgot to buy the widgets. Think about the number of times you've had a to-do list for the day that you have not written down, and how many times you've forgotten to do that one key thing. Now, imagine all the different scenarios and components that go into trading and see if you can actually explain to yourself how you could possibly be successful without a concrete trading plan. We're going to talk about a step-by-step process on how to build your own consistent trading plan. By the end of this video, you should be equipped with the right knowledge that's needed to fit into your professional trading plan. If you don't have clear goals, there's no way you're going to achieve your financial targets. You can't achieve your goals if you don't establish them in the first place. Trading is like a business, and like with any new business, you'll have goals that you want to accomplish within your business. If you don't have goals, you're not going to take the next step to achieve your financial dreams. The first component of your trading plan should deal with setting up your financial goals and objectives. You're going to need short-term goals, daily and weekly, medium-term goals, or monthly, and long-term goals, or yearly and beyond. You need to be realistic about your goals because you're not going to turn a $10,000 account into $1 million account overnight, no matter how hard you want it. For example, a more realistic target might be 20% as a monthly target rather than thinking about doubling your account every month. With the power of compounding, reinvesting previous profits, by the end of the year, your account balance will stand around $89,000, which percentage-wise is more than any hedge fund will be able to accomplish. And here's another view that breaks down your returns on a monthly basis. As you get better at trading, your trading account will grow, and you can refine these trading goals at that time. Just don't set yourself up for failure by shooting for too large a goal. After setting up your goals, you want to decide what type of trading system you're going to use. Is it going to be a trend following system? A mean reversion system? Maybe a counter trend system or a range bound trading system? The most important aspect of choosing a trading strategy is to make sure it fits your own personality. Once you answer that question, then you can choose the right trading strategy for you. The second thing you need to establish under your trading system is what instruments you're going to trade. Are you trading only the Forex major currencies? Or are you trading Forex cross-currency pairs? Or maybe you're only going to trade the Euro-USD, the most active currency pair. You want to make sure that whatever market you're trading your system on, you've done your back testing and forward testing, and you've got your positive expectancy in the instrument that you're actually trading. Now, the third component of your trading system is the time frame. Are you going to trade intraday, like 5 minutes, hourly, 4-hour charts? Maybe you're going to be trading a particular session, London session, New York session, or Tokyo session. Are you going to be a swing trader or a long-term trader focusing on the bigger time frames like daily and weekly charts? No matter what time frame you choose, it should all come down to your own personality and temperament. Not everyone is built the same. Some people like instant gratification, in which case they're probably better off trading intraday charts. However, if you have a more analytical mind and you like to take your time doing the appropriate research, perhaps a higher time frame is more suitable for you. And lastly, the fourth element of a good trading system includes some sort of criteria for your entry, stop-loss placement, and your take-profit levels. You're going to need some parameters when you get an entry signal so you won't get into a state of analysis paralysis. Here we can include indicators or anything that needs to be part of that entry-exit signal generator. You want some simple, clear-cut rules to help you manage your trades so you can flawlessly execute your trading system. The simpler that you can make your rules and your parameters for entries and exits, the better, and the more consistently you're going to be able to follow your trading plan. Money management is probably the most important and critical aspect of any trading plan. If you don't implement strict risk management rules, you're going to be like the other 95% of traders who just lose money. The first thing you need to decide is how much money you are willing to invest in your trading account, as you don't want to link all your net worth to your trading account. Secondly, you'll have to decide how much risk you'll put at work from your trading capital on each of your positions. In other words, your position sizing. This will keep you from wiping out your trading account if you go into a drawdown or losing period. Most hedge funds don't risk more than 2% on any particular trade idea, and you should do the same, especially if you're just getting started. This will ensure you survive while you're learning the ins and outs of Forex trading. All the information about your risk tolerance and how you manage your risk, how you handle drawdowns, should be contained in this section. For example, when you lose X amount per day or week or month, you can have a rule set in place so you take a break and try to figure out what's going wrong. This section should contain all the tools and information you need so your trading process operates smoothly. You also need to write down what you need to do in case of a trading emergency. Like, what if your internet goes out? Or what if your power goes out? Or what if you have open positions and everything goes away? You need to have a backup plan. For instance, perhaps you need to write down your broker's phone number to be able to contact him in such cases so you can close your positions. You can also choose to have a second internet provider in case one goes offline, and you should also consider a backup power supply. The last thing you want to be doing in an emergency situation is running around trying to figure out who to call and panicking because most likely you're just going to make the wrong decisions. Your trading plan is your collection of rules that you need to follow in order to successfully operate your trading business. Hopefully this video has provided some clarity in terms of the key elements of a good trading plan. At the end of the day, your trading plan should include everything you'll need to operate your business successfully. Your trading plan should also suit your own lifestyle and must be developed around your trading personality. To summarize, a good trading plan is not limited to our 4 key elements, but they are the base of any successful trading plan. Your trading plan will evolve alongside your progress as a trader. Now, the most important thing is to start writing it and invest some time until you come up with something that can be your guide throughout the trading day. The time you'll dedicate to this task will yield a lot more than you can ever imagine in the long run. And that's all for today's video. Come back for my videos on Monday, Wednesday, and Friday at 3 p.m. New York time, barring unforeseen circumstance. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and I'll see you on Friday.